Boss Resources has released a positive pre-feasibility study for their Honeymoon uranium project in South Australia. The results of the study were impressive, as it confirmed our belief that the Honeymoon project is on track to become the next uranium producing asset in Australia. This has resulted in an updated valuation for Boss of 23 cents per share. There was a slight decrease in our valuation due to a reduction in the long-term production guidance. The two highlights of the PFS were maintaining the low capital costs as well as the low operating costs for the project. Due to the significant infrastructure already in place for the Honeymoon project, the initial capital costs are just US $10 million to recommence production. The low capital costs, as well as the fact Honeymoon is one of only 4 fully permitted uranium projects in Australia, will allow for the project to recommence production in a significantly shorter time frame compared to other uranium development assets. Stage 2 development costs remain largely unchanged from the previous guidance. Again, relatively inexpensive when combined with the Stage 1 costs to become a £2 million per annum uranium operation. The Stage 3 capital expansion costs did fall significantly compared to our previous estimation. This was in part due to the reduction in production output. Importantly, the Stage 3 expansion is likely to be funded from accumulated cash reserves from the £2 million per annum operation, as well as project financing, therefore reducing the likelihood of future capital raisings past the Stage 2 expansion. The second major highlight from the PFS was confirmation of the low all-in sustaining operating costs. These costs are similar to the previous guidance, and confirmation that the Honeymoon project will be one of the lowest cost uranium projects in Australia when production commences. As mentioned earlier, the factor that did reduce our valuation was reducing the long-term production guidance from 3.6 to 3.2 million pounds per annum. However, we understand the company made this decision as 3.2 million pounds per annum is in line with the current export license agreement. Looking to the future, Boss will not surprisingly commence work on a DFS, where the wellfield trials are a critical component of this study, due to be completed before the end of the year. However, the greatest influence on Boss and their future share price will be the uranium price. Most experts have now stated the uranium price has bottomed out, with the expectation of a higher price in the future, driven by increased demand as a significant number of new nuclear reactors around the world come online. We believe a sustained long-term uranium price of at least $60 per pound will be required before a development decision on any new uranium development assets around the world are made, as a price lower than this in most cases will not see a return on investment.